Hey everybody, Jim Malone here. It's Dallas Trading Floor, and it's the day after Battery Day. Well, Battery Day didn't quite go as planned, and Tesla's been selling off, but the rest of the market's been selling off too. But there is some actually good news. Nike, which was in a buy point, which was in a very good pattern, has gapped up. So there is some light at the end of the tunnel, but we're still in a market under pressure. So be very, very careful with any new buys at this point. It's best to be in cash, possibly at least 50% in cash and maybe more, because there will be some bargains out there. But right now, the market is kind of going sideways into the election. I can't quite figure out exactly what the direction is, but it most likely is going to probably retest the lows that it made on March 23rd, and that was at 211 on the spider. Hopefully, it won't go that low because there's a lot of pumping in the economy with with all the with what the Fed has been doing. But it does look like the stimulus checks may get held up, and it's gonna start to bite with the with a lot of the airlines probably starting to lay off in October. So hopefully that won't go into a full scale rout, but definitely the market's under pressure. So a lot of people are just getting real defensive. They're moving out of some of the tech issues and into some of the other ones that are less loved. So just wanted to put that out there for everybody. Basically here we are. Tesla is pulling back, and it might be a buying opportunity. I did put a video on TikTok and on YouTube and on LinkedIn about the pullback to the potential 50-day line. So hopefully we might be able to, possibly, even though it's not a time to be fully invested, there may be some opportunities here. So I just wanted to show you basically the market is under pressure, so we got to be very, very careful in how we enter this market. We really don't want to be all in with both feet. We kind of want to be taking it easy. The S&P 500 is down a bit. The Dow Jones is down slightly, but again, Nike was just in the Dow Jones. It did quite well and it gapped up. It had great earnings, and usually I don't usually hold through earnings typically because that's a good way to get burned. But this time, boy, it went up. So it's an 80-20 rule. Sometimes you're right, sometimes you're not. I definitely was on my watch list, and I kind of kicked myself for not getting in on that. But it was a tremendous numbers for Nike, and it looks like they're going to do well into the holiday season. So and one of the things about Nike is kind of really interesting is that they have really transitioned away from total dependence on retail to their online presence, which is absolutely fantastic. And they do have all these different models, and I'm not really into it, but there are a lot of people that are, and so it's kind of a fun thing, and they're doing very well. And by the way, they're the largest sporting goods company in the world. So as we are, sheltering in place, there still is sports, so that's how it goes there. So here we go with the with the spider here. This is the Laurel's largest ETF, and it's currently at 325. Now, I think a very, very important level on the spider is about 325, and you can see it's pulled below the it's pulled below the 40-day the 50-day moving average. I kind of want to show this to you with a little pointer here. Hopefully, I can get that to work. There we go. There's the pointer, and that is right here. This is the line that we kind of want to be very, very reticent on. Oops, that's there we go. This is the kind of the line that we want to be watching. It's, as you can see, it's continuously falling through here, so it may not get support. We may go back and retest. The first retest is going to be about just shy of 300, maybe about a 295, 296 in there. That's the first retest. The second retest is probably going to be at 272, and then potentially we could go as low as 212. That was the low that was made on the 23rd of March. So I do think we're going to retest here, and the question is, how low are we going to retest? And that's really the thing. So it's really not a good time to be opening new positions. Now, when you're looking at the spider, if you look at the QQQ, you'll notice that it fell through the 50-day, and then it pulled back up to the line, and then it's pulled back again. So it's going to be more on the line here. The critical level for the Invesco QQQ really is 275. It's below that. It's 269. And so, the question is, will it see support here? I don't know, but it probably will be moving lower, at least for a few weeks and possibly into the election. So just be very, very careful about initiating any new buys, because we do have a situation where there is kind of weakness broadly in the market, and we are very, very close to correction. We're very, very close to a correction, and we may be actually, if by the end of the week, we may actually be in correction territory, and that's 10% down. That's a technical term, 10% from the high to the low. So that's kind of where we are. Now, I just want to show you the chart on Nike. It's a quite excellent chart. Again, on earnings, it just boomed right up here off the 50-day line. A lot of strong buying too. So it's not all, it's a mixed bag. I mean, it's not all negative. Nike certainly is looking good. Tremendous volume here, 705. What I think is happening here is some of these really kind of reliable names like Nike that are in the sporting goods and kind of the consumer products area, they are being bought by the funds because this is a defensive move, because they've run up so much in the techs. I think you're going to see a lot of the funds basically trying to take their profits out of the techs, and definitely we're seeing that because of weaknesses in things like Apple and in Amazon. So at least recently, that's been the case. Just want to show you kind of a trading plan for Tesla, because I think a lot of people are interested in that. I certainly am. This is basically just a line here that goes from where it made the low on the 50-day moving average up to where it's going now. I do believe that we will probably see a bounce here, and definitely it bounced a little bit at about 375. So. If it could firm up here, and I don't know if it can, because it looks like there's some consolidation a little bit below it, but I do believe that if it hits about the 360 level, that might not be such a bad area. That's going to be right here. That's where the 50-day moving average is. So I do expect that this will it will pull back probably to this line, maybe not quite, and then it will bounce. But I do think it is still in an uptrend. It just isn't at the level that it's been going at, because it did move up very, 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 very sharply when it split, and then it split, and then there was a little bit of a sell-off here, and the reason for that really was the shorts getting taken out. So that's kind of the trading plan that I would be looking at for Tesla, at least in the near future, is to possibly see if it does pull back all the way to 360. Then you might want to consider buying it. You might want to consider buying it at that level. But again, it's not a recommendation, obviously, because Tesla is very hard to evaluate. It definitely moves all over the place, and so there you go. But I just for full disclosure, I am in only 3 stocks currently, Tesla being one of them. And when this was taken, it was 393. It's a little bit below that now. It's taken a dive there a little bit. Lots of volume, lots of selling going on. Oracle, it just seems to be holding right at the pivot. The pivot for Oracle right now is 60.50, and it looks like the deal with TikTok and Walmart is going to go through. So that's interesting, but not very a lot of conviction. Low volume, so see what happens there. I also have a position in Taiwan Semi, and because they are the manufacturers for NVIDIA and a lot of the other companies as well. But again, this is off a little bit as well. If you are interested in taking a look at kind of how I'm trading at all times, I do have something that is definitely kind of interesting, and that is the small portfolio that I have over on Google. And I just and you need to if you want to see how I'm trading, and this is currently how my portfolio looks, just so you can see it. This is how it lines out there right now. And basically, I'm only holding 3 things. I'm mostly holding cash. And then on this one, now I do have the Tesla in another account. I did sell Tesla in the small account I bought at 373 and I sold at 397. This was basically a pullback of about 4%. I did sell there, took the profit. I'm waiting again for the right time to come back in on Tesla, because I do think that's a potential. I think it will yo-yo up and down. Just basically two positions. I'm basically almost out of Taiwan Semi. It looks like I'll probably get shaken out of Taiwan Semi by tomorrow. So that is the that's that. Now, if you're interested in getting a link to see the small portfolio, it's very, very easy. All you have to do is go over to www.Dallas Trading Floor and just sign up. And I also have the action trailers. That's the main thing I have. And of course, if you're looking at me on TikTok, very easy to get that information. Just go to my bio, hit the link, and it'll take you right to the sign up page. And of course, it's all free, so kind of a nice thing there as well to see, so that you can, possibly look at how I'm trading. So it might be a help to you. So let's take some questions here, because it's kind of, it's been a sell-off day. So, yeah. Hey, thank you. Are you still holding TSM? I sure am. I don't think I have been shaken out of TSM yet. I may be. I'm very, very close to possibly getting shaken out of TSM. Let's take a look kind of at the chart of TSM. That was kind of, I thought I had entered that better than I did. But again, and it's fallen right to the 40-day line here. So, just let's show you that so you can see it. Basically, let's look at the weekly chart. That's really how you look to see where the entries are going to be. And as you can see, it's pulled right back to that line. We are kind of in a flat base. The pivot was 84. It's at 78 now. I'm more than likely, when I check back in my when I check back with the small portfolio, I'm probably sold out, because all of my my stop losses are typically 7% from where I bought it, and I bought it right at the bottom of the pivot. So that one didn't quite work. Oh well, you got to take the good with the bad, right? Okay, still holding Google at 1056, Apple at 66, Tesla. Wow, at Tesla at 154. Do you think the market will keep declining? Well, you know what? I think that you have just done fantastic. This would be a good time to go to cash. I do think so. I really do think so. Go to cash, wait, because it's going to bounce. There's no question. But, if you've got that much and you've made that much, I think it's time to possibly at least consider selling half of your positions. Now, what I would do is I would look to see what I had invested in each one of these. I would sell. I would sell. Basically, take my profits, and then I would ride. At the minimum, I would ride on the house's money, or better yet, you have so much nice profit there. I would consider selling at least 50% of your portfolio and going to cash. So that's a great question, and that's a great problem to have. Congratulations, man! Congratulations. That's pretty awesome. I got cocky and bought in 445. So now, then at 445. Now it's, what should I do? Hold it. Well, averaging down is never a good strategy. This is one of the reasons why you sort of have to be careful when you're buying anything. You always want to buy on an uptick. So it's really not a time to be buying. Now, you could, depending on how many shares you had, I don't know, if you have 100 shares, you could possibly sell a call option. That's what I do, basically. If you're down, look at your positions. Anyone, take half your positions that are down more than 7%, and probably you want to sell them just because you want to protect your capital. Now, is it going to turn around? Hard to say, but probably. Probably with Tesla. Tesla is very volatile. Battery day it was kind of a lead balloon, and it didn't work as well. But long term, I do think it's good. I think it may be settling around the 375 level, but who knows? I mean, I can't predict the future. I do think though that it's gonna show some strength at the 40-day line, only because looking at the chart, that seems to be where it's been headed. So let's pull up the Tesla chart here again, so we can take a look at it to see kind of if we're going to get. And the reason I'll show you this is because I do think we're going to get some support at the 40-day line. So pull back here. That's the 40-day, the 50-day line, excuse me, is right here. It's this red line, and I do think we're going to pull back to that. Now, it's pulled back up. It pulled as low as I think. Let's look at that. I think it pulled as low today as 375. I'm not sure exactly. I wasn't watching exactly. There is a lot of selling activity, but it seems like it is firming up into the close. So that is, that is kind of good. Now, what will happen tomorrow? Who knows? It's been down 2 days. I do think that it possibly will test that 360 level. I do think it will, because that is where the 50-day line, that's where the 40-day line is. So, it's going to be a little bit rocky. It's going to be rocky. Hey, hello, hello. Thanks for watching, by the way. Hey, thanks for Richard. I like that. That's great. Thanks for watching. Oh, please respond. Did I? Okay. Well, hopefully I responded there. You're on Twitch, and I am broadcasting on Twitch right now. By the way, it's at twitchtv.com/DallasTradingFloor. So I'll go over there and hopefully after the show and maybe answer some questions. Don't be such a delinquent like I've been. Now, let's see questions from TikTok. What's Tesla's next support level? Well, I really believe with Tesla, and I'm going to pull back the chart up again to kind of go over it with everyone. I do believe that the next support level on Tesla is this 50-day line, and then that's about 360. So let me give you an exact number on that. Yeah, there we go. I got that. It's about, between 359 and 362. Now, the original pivot way back before, we started with the split is 359. So there's a very, very strong base at 359. There's a very, very strong base, and that was prior, on a split adjusted basis, that was prior to the announcement of the 5-for-1 split. So there is a very strong support at the 359 level. I just want to be very clear about that. And I don't believe it will move too much lower than that. So that's why I'm expecting a bounce at the 40-day line. That's what I'm expecting now, and that's how I've positioned myself. Even though my average price is higher than that, I do have options. I have call options that should push that down to that level. So that's kind of where I'm seeing it in terms of the support, at least in the short term. So. Okay, great. Tesla long term. Well, Tesla long term, Tesla's a great company, and I do think, we are moving to an electrical vehicle future, and however battery day goes, if it goes good or goes bad, we're still headed down that road. There's just so many advantages with electric cars over gasoline cars that this is going to be an eventuality. The technology just hasn't really been there until very recently. Of course, Tesla's been pushing it, but the other companies are coming in here too. And even though I sometimes say bad things about GM, I mean they did have the EV1. Unfortunately, the problem with GM is they invent great things, and then the management decides to sabotage them, which is kind of sad. But I do see the world moving towards these electric vehicles, and this is going to be a major growth lever for at least the U.S. manufacturing, and possibly other countries too. So this is a growing thing, whether it be Tesla or somebody else. I do think Tesla's still in the lead, and I do think that, yes, it is very highly valued, and a lot of the analysts scratch their head, but I still am a Tesla bull. I really am, because they are solving problems that it needs to be solved in order to make this work. And I do think that once these things are solved, it's going to be much cheaper to manufacture an electric car rather than a gasoline car. So there you go. Zoom, it keeps going up. Yeah, thank you, Mohammed. I appreciate it. Yeah, Zoom is, it's everybody likes Zoom because of the the work from home, and that truly is a trend. I mean, that's not just that's not just hype. Boy, look at that, $500. I think that's a little bit extended. I'd be a little bit afraid of buying it at this level, just because I just don't see a base on this stock. Now, I'm a growth stock investor, so I like this. I want to see, but look at this 21-day line. This is very, very strong. There's huge buying. I would just be afraid of buying at this level. I just think that, there was a blow off top at 478. We're way past that. We're 67. You know, the pivot was way back. So I'm just, boy, it's a tough one to say. Do you want to get in? I think it may be a ride up, and there's been a lot of buying, but I'm just very worried that we might see a pullback, at least to the 478 level, and possibly lower, possibly as low as 281 on that. So that's that's my 2 cents on Zoom. I'm not in Zoom right now. But it's a great company. I mean, it's done just terrifically well. Okay, so pull back to the 21-day moving average. Is that a buy? Well, on Workhorse, usually depending on the market, that might be. Workhorse has been doing fairly well as of late. So, is it right now? It's not in the buy zone. Well, I want to show you that basically on the chart here. We do have a situation where we're below the 21-day line. That's the green line here. And as you can see, there's a little blue kind of shaded area. That is a buy zone. Unfortunately, we're below that buy zone. So it's be very dangerous to buy it at this level. But it still has a relative strength of 99. What does that mean? Well, that means that this stock is outperforming 99% of the S&P 500, which makes it absolutely in the top of the top. So it's still pretty good. I mean, it's still pretty good. At 2260, I do think you are taking a little bit of risk. I want to see a bounce. I think it may pull back as low as the 50-day moving average, and that would be about 1857. So I just wouldn't buy it in here. I'd watch this, see if you got a bounce off of the 50-day line. Now, here's one thing, and you got to be really careful in a market like this that's basically correcting, is that if you're going to go into a stock, make sure that you buy it on an uptick. So even if it's gone down, you want to see it bounce, and you want to buy into that bounce. You don't want to buy it and then catch that falling knife and it just falls more. So be very careful. It's really not the best time to enter new positions. Now, it's one thing if you have positions and you're hedging them, that's different. But if you have going in for new positions, I think that it's just really, it's kind of precarious. We want to be a little bit careful. As you can see from my small portfolio, I'm pretty much all in cash, and I may even be more in cash at the end of today, just because I'm just not getting the kind of results that I need buying on the basis. So there you go. Oh, thank you, man. All in cash. Thank you. Well, good. I mean, look, these all in cash alerts don't last for very long. It's not the end of the world or anything like that. But if you position yourself now, you build the watch list. And that's what I'm going to be trying to do in the next few days. Is I'm going to try to show people how they could build their watch list, and then once it comes back, and it will. Now we may go into more of a correction. If it does, if the market is in correction, which isn't currently, but it may be by the end of the week, then we're going to start taking a little bit different strategy. We're going to probably try to move to stuff like the SQQQ, or actually shorting, or that kind of thing. But we're not there yet. So being in cash is very good. Building your watch list, looking at the stocks that might be good shorts. Now, interestingly enough, in a downturn, if we do get that, and I don't know if we will, I think a lot of this is based on the election, but if we do get a downturn, then you're going to find some of the very best stocks that were absolutely stellar performers are going to be the ones you want to short. Now, it doesn't make a lot of sense, but that's how it works. Companies like Amazon are setting up potentially to be shorts. Now, I wouldn't short them now, and I wouldn't be short Tesla, not right now, but we are getting to a point where we could soon be in a situation where we're going to short. But cash is a great place to be. Thank you so much for that comment. That really makes me feel good. What do you make of SPI today? Well, let's look at SPI real quick. SPI is, symbol not recognized. Well, it helps if I type it in right. There we go. Yeah, SPI Energy. Wow, oh gosh. This is interesting. Chinese manufacturer of photovoltaic cells. This is tough. I don't think in this kind of market, if it was a few weeks ago, a few months ago, maybe, but not now. This is a correcting market. We don't want to really enter new positions. This is a very dangerous pattern. It doesn't. I don't know what's going on here. It's got a relative strength of 14, and it's off the charts. So something must have happened. I don't know what the news is here. I guess they had good earnings. I just don't know. I think this is just really be cautious. I wouldn't buy this. This kind of that kind of reminds me a little bit of Luck and Coffee when it started, and of course, as we know, that didn't end well for a lot of people because it was a fraud, and you got to watch out for that. You really do. Not saying all Chinese companies are fraudulent; they're not, but SPI, you got to be super careful right now. There's a lot of weird politics going on. It's hard to figure out, at least for me, anyways. Thoughts on Twitter? TWTR. Wow, Twitter. Well, the interesting thing about Twitter is I think Jack Dorsey's other company, Square, is the better company, but Twitter seems to get all the news. So there you go. Twitter has gapped up. Wow, look at that. Look at that. Okay, it's got earnings. Okay, it's due in 30 days. Why does it gap up like that? That is just so interesting. I'd be careful about this one. You might want to put a toe in the water. I just don't know. I don't really want, if I bought this thing, I would buy it into earnings and I would sell right before earnings. That would be how I would treat Twitter. I'm not really. It doesn't have a bad chart though. It doesn't have a bad chart. So let's look at the buying criteria to see. Okay, it's okay. 6 out of 9 is pretty good for buying criteria. Now the only thing is, it doesn't have as strong an earning per share as I like to have. Well, actually it does. 87 is really good. It's made that metric. So yeah. So 8 out of 9. I mean 7 out of 9. That's very good. That's very good. So yeah, I mean that's definitely at least a watch list. And it wouldn't necessarily be a bad place to enter the stock at this point. But I wouldn't hold it. I'd hold it into earnings. I wouldn't hold it beyond earnings. That's the main thing. Just wouldn't hold it on beyond earnings. Twitter is doing, yeah, it really is. It really is doing good. You have to admit, I just don't know quite why. It doesn't. I can't see anything in the technical, but don't know. Don't know. Stop loss for Tesla might not be a great as you rightly said, as it moves all over the place. So, yeah, exactly. This is Mohammed, you're absolutely right about this. Thank you really for bringing that up, because here's how I play it sometimes with a volatile stock like Tesla. What I do is I move my stops way, way down. Now, I do have stops, but they're not at the normal 7% level. Instead, what I do typically is I will purchase 100 shares in blocks, 100 share blocks, and then I will sell options, call options against them, and that absorbs. It's kind of like a shock absorber for really volatile stocks. As the stock goes down, the value of the options typically goes up because you've sold them, and you've already had the money. This only works this doesn't work 100%, but it's a good way to sort of dampen a little bit of this volatility that is in Tesla. But I do think that, and again, it's a projection, but looking at the chart, I believe it should bounce at about the 50-day line, which is 360. So yeah, you're right. I mean, it's a very volatile stock. Normally, when I enter a stock and I don't know sort of how it's going to perform, I'm almost always putting a stop loss in case I'm wrong. And this has served me very well. But with Tesla, where I'm not necessarily going in at the optimal buy points, then depending on the volatility, you might want to have a little bit more play in that. And also, there's other hedging strategies which I employ. Unfortunately, they're not available to as many retail investors because it requires more capital, and that is to employ some of the call options. But yeah, I definitely hedge it, and I pull the stops down way low. So there you go. Thanks, man. Shopify. Wow. This one has just been nothing short of phenomenal. And I keep saying that, and people get tired of hearing it. But this is probably one of the most valuable stocks I think on the most valuable Canadian stocks there is. Now it has fallen as of late. It has pulled back to the 21-day line. I don't like the fact that the 21-day has crossed the 50. I don't like that because that's showing weakness. But that said, I mean, there's been some strong buying, so hard to say. It's still got extremely good relative strength of 96. I just don't want to buy a trending chart, a downward trending chart. I want to wait for it to move up. It is starting to make that turn though, but I want to see it move right up to about 1,000, right at that 50-day line. If it crosses that, then I'll be more excited about it. But right today, it's pulling back along with the rest of the market, so it's not that unusual. But it's got extremely strong ratings. Basically, it's 7 out of 9 on the buy ratings. The only thing I don't like about it, again, it's a little bit. Normally, you want to buy them, a maximum of about 15% off their high. It's just a little bit less than that, which is not good. But I want to see it go up a little bit more, up to the 50-day line. But if it does do that, then you might want to put your toe back in the water on this one. But right now, it's a watch list. I couldn't buy it at this moment, but it's definitely a watch list. It's a great company. What do you think about Peloton? Well, Peloton has been doing fantastic as of late. Of course, everyone's getting on those cycles and cycling, and it just keeps going up. I do think that because it doesn't look like we're going to reopen on time in places like New York and places like that, this may even get some more action on that because of that. So, and it's pulled up. It's at 95. There is another stock out there, Norditrack, which you might want to look at as well. I don't remember the symbol on that one, but Norditrack basically has a competitor product. I'm not saying, I normally don't like Me Too's because typically you want to buy the market leader, but in this case with the home system and the fact that Norditrack is a very reputable big company, been around forever, they might have some real competition in this area. But the chart looks good. It's just moving right up to the 21-day. That it seems like it's getting support. I'd want to see it. I won't want to necessarily buy it at these nosebleed levels. I'd like to see it kind of move down, get some support on the 21-day, and then reverse, and then I would be in it. But right now, it pulled up nicely, then it's pulled back. So the question is, will it get support here? I just don't know. But it's definitely, if it pulls back to the 21-day line, which is 84.14, then and it bounces, then I think that's it's probably a buy. So. But just this market is just really not a good time to initiate brand new positions in. So you just really have to be careful. I like Peloton. It's a good chart and it's a good stock, but very, very careful. No more than half a position. And what do I mean by a half a position? Well, if you take your portfolio value, let's say your portfolio is worth $80,000. That's really easy because the math is easy. You divide it by 8, and that gives you 10 pieces. It gives you 8 pieces of pie. And those pie pieces are each $10,000. So that's one full position. So that's kind of the way to think about it. It's like a pizza that has 8 slices. You don't want to commit any more than 1 slice at a time, and you want to buy an uptick. So that's a way you can size your portfolio so that you kind of compartmentalize some of your risk there, so that you won't get killed. When will Apple bounce? We'd like to get back before the 5G, and before the 5G phone is announced. I don't know when Apple's going to announce, but I know that there's been a lot of selling in Apple. A lot of the big, we're getting towards the end of the year, and this does happen towards the end of the year. Many of the funds are rebalancing. A lot of people have did make a lot of money on it. As a matter of fact, this is the number one holding of Berkshire Hathaway is Apple, and they have it's papered over a lot of the losses in a lot of their other areas that weren't so good. So they're going to be selling some of these basically to reinvigorate their portfolio and make it so that they paper over some of those losses. So that is part of the reason why. But looks as if we are pulling back to that 50-day line. That's why these lines are so important. I keep talking about them ad nauseum. But even though we've pulled down a little bit today, it does seem to be kind of consolidating right about this 50-day line. The 50-day line currently is about 111. It's at 107 right now. If I were to buy this thing, and I don't know if the free fall has stopped, and I don't think you want to buy it right now, but I do think you want to watch it. I want to see it pull above on good volume. I want to see it pull above about 111, which is the 50-day line. So that's where I want to see it before I could get too excited about buying it. Unfortunately, as you can see, the green line here, that's the 21-day, is moving in a downward way. You don't really want to do that. You want to kind of have them all, if everything is kind of in, if you're kind of going with the force, you want to have the green line on top, you want to have it heading up, you want to have the red line heading up, and you want to have the black line heading up. That's kind of your best bet. But right now, there's a pullback since the announcement on the split. And so this is another thing too. When you're playing splits, a lot of times the best time is to sell it right before it splits, and that's exactly what happened here. Now there is an opportunity coming up, and unfortunately it's not till December, and that's on Nike. It is moving. It's going to move higher because they announced a 2-for-1 split. So I'm going to hopefully be covering some of that split action, potential making some money with the split action going forward. So just kind of put that on your calendar and kind of take a watch at Nike NKE, because they did announce a 2-for-1 split. And that does usually, believe it or not, even though a lot of the quote-unquote professionals will tell you it doesn't matter, it does matter. And it can indicate that the stock will probably rise up until the day of the split. So that is something that you might want to look at too. EPAM, friend in Canada here. EPAM, is that right? Yeah, EPAM. EPAM Systems. Wow, look at that. Well, it's fallen a little bit. Oh, yeah, we do have something, and I want to show you this on the chart, and I don't want to be negative here, but I'm going to be negative because you see this little Easter egg here? Kind of, I don't know if you can see this on your chart because it's a little bit hard to see. But that is the highest level that it has made since the last pivot. And unfortunately, that's a red, not a blue bar. And also there's a movement down below the 21-day. That is a classic distribution. So this is people are selling this. Unfortunately, the people in the know are selling this. Now, it is 63% owned by funds. And so let's look at some of the criteria here. But yeah, it's 6 out of 9, which is super excellent in terms of the buying criteria. But the problem is you have all of this selling concentrated. I'd be very, very careful about this one. Based on the chart here, it looks as if it is going to probably move lower. And I think it's going to probably lose below the 50-day. Based on this, it's going to move below the 50-day, probably at about 302 or so. So this is probably going to move lower, unfortunately. Even though it's a good stock, it just has the sell kind of, the institutional sell chart pattern, and you just learn to see those. So I think that's the case. Since the day I joined, I crashed the whole stock market. Ouch! I hope not. Now, it's impossible to crash the stock market. It's just there's so many people in it. But you got to go with the flow because you can't fight against the stock market. That's the thing you learn. Nobody is big enough. Not even the very biggest of the bigs are big enough to go against stock market. So you always want to look kind of before you leap. You want to look at how that market is headed. You just do. You want to look to see kind of what the kind of what kind of what the general the general direction is. And that's why the first slide that I always show is a market direction slide. It is currently on the uptrend is currently in an uptrend, but it's under pressure. So it's under pressure. Now the question is, how far are we between the high and the low? The high, of course, made right before the COVID-19 thing, and the low. We are getting very, very, very close to a 10% correction from the high up here to the low. So we are almost in correction territory. So it's really a difficult time to be buying any new issues. So that's why I'm saying, if you're alienating the issue and you're hedging it, that's one thing. If you're entering into a new position, that's not really good enough. You've got to, in this kind of market, you really have to, possibly be very careful with your cash and looking to possibly protect that cash. Because we could definitely move into a market in correction. That's very likely, by the way. The more days that we have of market uptrend under pressure, the more likelihood that we will move into that correction territory. And when we're in the correction territory, it's the strategy really changes. It changes more to a defensive strategy rather than an offensive strategy. Right now, most people are comfortable with the offensive strategy, buying stocks and then watching them go up. But in a defensive strategy, we want to sell first and buy later. Kind of that's what shorting is. So, would you buy the SQQQ if the market continues under pressure? Okay, you know what? I do. I would. This is a thank you, Mr. Sid. This is a very insightful comment, because the advantage, of course, of the SQQ is that it moves against it moves against the general market direction, and the Qs are the Nasdaq 100. Those are the largest technology issues, and the SQQQ is a ETF that shorts that basically on a 3-to-1 basis. So for every 1 point down on the Qs, typically, this is the way it's supposedly designed, you will see an increase of 3 points up, 3% up on the SQQQ. So 1% down on the, and now of course we're almost at a correction, which is 10% down. So theoretically, from the top to the bottom, we should start to see a turn on the SQQQ. So let's look at the chart again. This isn't, the problem with the SQQ is this is something that when it's changing, that's when you're going to jump in. Now let's look at the weekly chart to kind of give us an idea of sort of how it is. Now you can see, normally, if you were looking at this chart and you were going, Jim, should you buy this chart? I would say no. Ouch, this is terrible. It's going from higher, from upper left hand to lower right hand. That's very, very bad. But as we've seen some weakness, you can see it's bounced. It's bounced and it's moving above that 50-day moving average. Now, if it gets close to the 200 right here, this is the black line, then it's game on. There's been a lot of buying of the SQQ in the last 1, 2, 3 weeks. So people are getting ready. Now let's look on the daily chart to see kind of like that. It's still kind of trading, just right around. It hasn't really moved up or down. It's trading about 28. Let's look at the 60-minute chart. Yeah, it's moving up. So there's definitely interest in this. There's people that are actively hedging their positions, and that's really what this is about. If you have positions that you don't necessarily, that are in the Qs, like say you have the QQQ, you don't want to sell it for whatever reason, and you want to kind of take a little bit of risk off there, you're going to buy equal measure of the SQQQ. So there you are. Thoughts on SPI? SPI. SPI. Let's see, SPI. Yeah, I talked about that a little bit before, so I didn't realize that I'm repeating myself. Okay, we have over 10% correction on the Nasdaq. Okay, we are in a correction, so do expect the arrow to change to a downward pressure. So if it's true, if we have it has to be in the overall market, it has to be in the S&P. But yeah, we're very, very close to the correction. So there you go. Thoughts on HWM? Look at HWM, Chris. HWM. See if they can. Helmet Aerospace. I don't know this company. It seems interesting. Let me look at the weekly chart on it. Yeah, it's moving. Okay, it's moving up. Don't know a lot about this company. To be honest with you, it's got a relative strength of 47. That's really not where I want to be. Are we interested in buying this thing? No, I'm afraid we're not. We're only 4 out of 9 on the criteria. So that just doesn't bode well. Now, I would watch this one because it does look like the 40-day is moving above the 200-day, but we're just not there. The earnings per share were up a lot. They must have gotten a nice contract. But still, we are in a position that you don't want to buy this one. This is, at the very, very best, a watch list. This is not a buy, unfortunately. I just can't recommend it. This chart is not good enough, especially because remember, we're in a market that's moving potentially downward. We want to be more in cash, so we really don't want to take on all that many new positions right now. We want to watch list things, but not necessarily buy them. It's sort of the window shopping time. We're window shopping right now. Can you please advise on Party City stock? It's under $10, but moving in an uptrend. Party City. I don't know what the symbol is on that, but let's see. Party, city, stock, symbol. And let's see. It's PRTY. Well, that makes sense. PRTY, party. Let me get a good chart on. Wow, that is moving up. Interesting. Wow. I guess Halloween's their big time. So maybe it's because of that. I don't know. 98 relative strength. That's good. It's right on the 21-day line. Interesting. So let's look at the. No, I just can't recommend it. I just can't recommend it. This just doesn't make enough. It doesn't check enough of the boxes. If you've made money in this one, you might want to consider taking at least 50% profit. I just don't know if this will hold up into the end of the year. So, boy, that sounds really negative. Okay, so let's go to TikTok. And thank you very much for waiting. Question. Okay, started with 4, sold 2, bought 15 more. Loving it. 25 shares. Seller. Excellent. Well, awesome. Anyone playing SBI? No. Do the same with Apple. Hopes to do phone. Yeah, you know what? I do think that, and this is part of the reason why I was in Taiwan Semi, is because I do think that the 5G thing is going to be huge. It really is going to be huge, and I do see some strength now. Right now, Apple had that big split, and there's kind of, who knows? But I do think that I do think the new iPhone will generate a lot of sales. Will they generate enough sales? I don't know, but I think they will. They seem to be able to execute pretty well. I mean, Apple has been, at least for the last few years, it's been pretty phenomenal in terms of their execution. Not only do they have great products, but they have great execution, and that's even more important sometimes than than that. But I do think that it is a little bit high. I want to see it go above about 111 before I be into Apple again. I sold out at 109. Just for your info. AMWL. All right, let's look at that to see what Amazon, American Well Company, provides telehealth services. Oh, American Well. I thought it was well like in a water well, but no, it's a well as in I'm well. You know what? I just can't recommend it. It's too new of an issue. Yeah, here's the thing about IPOs. Now, I want to show you. I just for comparison, I want to show you the IPO of Snowflake, which was a very, very big deal. Now, Snowflake came out of the box roaring, but then it immediately lost money. This is one of the reasons why you want to wait about 3 months before you buy an IPO. Now, you can see it came out of the box like a banshee. It went up above 300, but now it's trading at 215. So basically, within 1 or 2 days, within a week, it's a lost third of its value. So with the IPO, you want to wait about 3 months, and then once that's over, then you can start considering it. Now, are you going to not look at it? No, you're going to put it on your watch list. You're going to put it on a special watch list. Special, like if you go to Yahoo Finance, make a special watch list called IPO watch list and watch them. And watch them and watch them for the first 3 months, and then you might be having potentially really good deals. So that's how I play the IPOs. But never try not to buy the IPOs to come out of the door, out of the gate. As tempting as that is, because you always hear stories. Oh, I bought the IPO. Well, I actually did buy the Google IPO. It doubled, and then I sold it. And I thought I was the smartest guy in the world. Well, if I had held it, I would have been a lot smarter. But sometimes you win, but a lot of times you don't. I've had some turds. I've had some turds. So it's just better to wait that 3 months to see how it's trading, and then possibly look at it, because IPOs can be fantastic, but you just don't want to buy them right when they come out the door. Tesla need to go to 450, and then I'll sell off. Well, here's the thing. I do think it's possibly, it's likely to go back there. You might be waiting a while, because but I think long term probably it is. But don't necessarily don't be cast in stone. on Tesla. Tesla is a heartbreaker. It's a heartbreaker. I wouldn't short it either, by the way. I wouldn't short it either. Sell my 2 Twitter shares. Yeah, I would. You should sell. I mean, you're up 46%. That's pretty darn good, man. You did well. You did well. Here's the thing. Here's a rule, and this is a really good rule, and this is serving well. And this is, by the way, it's not my rule. This is a rule that was invented by William O'Neill, who I consider, kind of the, sort of my trading mentor. I've never met him, but I'd like, he's the old man now. But if something goes up more than 20%, now if something goes up 20% in less than 5 weeks, you want to hold it because it's probably going to go higher. But if it's kind of slow and it goes up 20%, consider selling half your position because that might be a good thing. So the fact that you're up 46% on Twitter, I would sell it. Take the money and run. At least sell 1 share and possibly 2. So that's great. That's great stuff. Hey, thank you. This is a great thing. I started out with very little money, many years ago now. And it has really served me well. I mean, I've been able to do things, I'm a very, I grew up in a very middle class kind of environment. I had good jobs, but I was never, CEO or anything. It would be nice if I was, but investing in the stock market has allowed me to do so many things over the years, buy my home for cash, have a car that I own totally, buy property, all this kind of stuff. All because of the stock market. And the way I got started is that I read I read this book and I want to share it with you. I want to share it with you because it is worth getting. And it's basically talks about the CanSlim method of trading. And I'm just going to show you my little bookshelf on my website, and this is a way that it's easy to if you're just new to trading, you don't have to buy it through my website or anything like that. But I just kind of wanted to show you, it is available at www.DallasTradingFloor, and these 2 books here. Now, the one that I think you'd be most interested in is the one with the green cover. And I'm just going to sort of blow that up a little bit so that we can, I don't know if you can see that. Yeah, maybe you can. There we go. Anyways, it's How to Make Money in Stocks, A Winning System, Good Times or Bad. And it is by William O'Neill. And it's available on the website, www.DallasTradingFloor. Of course, I'd love it if you buy it there because it helps us defer some of the costs of, defer some of our costs, and it's pretty cool that way. But this is a great way to go. So, just wanted to share that with you as well. So let me get back to the chat. For some reason, I am not seeing all of the. Well, I guess I'm not seeing all of the questions. So let me take the next question. And let me get back to the. Yeah, let's see if I can get back to the right screen here. There we go. I didn't have it on the right screen. I had to kind of move it around there a little bit. Okay, so I'm up 100% on workhouse puts. I think it will flush out. Wow. Yeah, I think that's not bad. That's not bad. Yeah, I think it does. Workhouse and Tesla do kind of trade sympathetically. I think that's very interesting. That's very, very good. That's very good. I like that. I like companion trades like that, and I definitely think they're definitely connected. So I think that's pretty shrewd. Thanks for sharing that, Jonathan. I really appreciate it. So, okay, well, whatever. No stop loss on Wealthsimple. Really? Oh, come on. That can't be true. Here's another thing. I do trade primarily on Charles Schwab and on Thinkorswim, which is a TD Ameritrade. And, I don't think I could live without stop losses. I love them because, I can calculate the thing, I could put it in there, and I can do something else. Because, I can't be on this, I can't really day trade. I can't be on the screens all the time. I got other stuff to do. So, boy, if you don't have stop losses, make sure that you've learned how to do stop losses, no matter what platform you're using, because you should have the capability of doing it. This is a very, very important thing. This is not a must-have. This is a gotta-have on your on your on your broker. You really got to have this. This. There's no debating about this one. You want to be. Not only do that, you want to practice doing your stop losses, and then what you want to do is keep a stop loss log. I keep a stop loss log. It's just an Excel spreadsheet, but it's always where I'm buying, where I'm setting that stop loss. Am I setting it at 7% down, which is 0.93 times whatever I bought it from? This is going to help you in the long run, because the key to this is getting into the right things on the right chart patterns, and then letting them move up, but protecting your losses to the downside, because you're not always right. I mean, I'm certainly not. And, you want to protect your capital. That's very, very key in this business, is protecting that capital. The Tesla Better Day event, I talked about a lot about using nickel cadmium. Should we find a place to invest in nickel? This is actually a good idea. Because really, even though it's called a lithium-ion battery, really, it's all about nickel. So, here's the thing about nickel. I do believe that, that is going to be a big issue, but there's really no pure play in nickel. There used to be a company called International Nickel in Canada. I don't know if they're really around anymore. But Freeport, McMoran, and some of those, they do mine nickel as well. But the minerals are really, really tough. This is sort of a different thing. This is really more of a futures kind of contract kind of thing, where you can make money there in this area, because it is a commodity. So I don't really cover that as much. There are some mining companies like Freeport McMoran and others that do mine it, but it's really more difficult. I think you really have to. I really think I think you really got to pay the commodities in order to do that well on that. But I do think it's going to be a big deal. So, anyways, any thoughts on gold stakers? Okay, well, I want to look. I just want to see how KL is trading right now. That's one of my favorite gold miners. I'm not really a big gold bug, as it were, but I do like the gold mining companies, especially the ones that have productive mines. I do think they're a good hedge. But the problem with gold is it edged up to its 2000. It kind of bounced off. So let's look at the chart for KL, just to kind of give you a view on that. It is in a bit of a consolidation, but it has fallen below the 50-day line. It's down to the bottom part of this consolidation area. So it's not really a buy right now. I want to see it bounce above 47.23. It's at 47.22, so it's right at the bottom of the consolidation. If it holds on to this level and turns, it might be a buy. Gold miners typically are good if there is uncertainty in the market. We definitely have that now with the election coming up, so that one might not be a bad one. You might want to watch this KL as sort of a go-to, but not buy it right now, because it's not ready right now. Thoughts on SPAC with merge close? I just don't know. But, SPAC, PAQ. This is the founder of Pershing Square. Spartan. Oh, SPAC. Is that right? It's PAQ. Is that right? Is that right? Is that right? Is that right? SPAQ with merger close. Blank check company formed. Okay. Wow. I just can't. I know this is all the rage, the SPACs and everything like that. The problem for the retail investor, which I count myself part of, I'm not an institutional investor, and I don't have any insider information. I am the guy without any insider information. I just don't like them because I just don't know what I'm investing in. That's the problem. But it does appear to be moving right up to this 50-day line. So, that's not necessarily bad. It's called Spartan Energy Acquisition in New York. I just don't know what they're doing. And they're they basically look like a vulture fund for the energy industry, which, let's wait until there's more stabilization in the economy. Let's wait until the economy reopens before we do that, because, without the economy reopening, we kind of got to see kind of where the bodies are in terms of the oil market, because West Texas Intermediate has not been holding the levels, so I want to see firm up in the oil markets, and I don't know that's going to come without the reopening of the economy, because that's really what drives it, is the reopening of the economy. So there you go. I bought the book. Hey, thank you, man. Appreciate it, Dottie. Every little bit helps. I think I make a grand total of 5 cents for that, but I appreciate it. Every little bit counts, and we're going to be coming out with the exciting. And I know you think this is exciting. I got to call the guy after this, but we're going to be coming out with. We're going to come out with the Dallas Trading Floor T-shirts and mugs and all the tchotchkes. Anyways, it's mainly for my enjoyment, and to prove to my girlfriend that I'm not completely doing nothing with my life. So thank you for buying off the website. Every little bit counts, and thank you for watching. And you know what? It's been an hour. I have wasted another great hour of your time, but thank you for all the people out there that are looking, and thank you for everyone on TikTok. This is a tough market to trade in. I know this is frustrating, but stay in cash right now. It's a time to be in cash. And there will be opportunities. If the market takes a movement lower, there's going to be lots of opportunities. But you can't take advantage of it unless you keep your powder dry. So I'm in a process of trying to keep my powder dry too. So it's frustrating as heck to trade in this market, because it's so screwy. But get at least 50% in cash, possibly more. And if you got some nice profits, consider taking them off the table a little bit, because there are going to be some There's going to be some buying opportunities coming up here, but right now we want to be in cash. Thanks again, everybody. It's always a pleasure. I really, really enjoy this, actually. And I'm not paid anything, so it doesn't matter. This is my training anyway. So, thank you again. And if you want to get the action trade alerts, very, very easy thing to do. All you have to do is go over to the website, which is www.Dallas Trading Floor. And by the way, if you are looking on YouTube, I would really appreciate, if you're looking on YouTube right now, I would really appreciate you kind of, getting in there and liking me. See that? That isn't that cool? That little, yeah. I want you to like the, subscribe and like me on YouTube. So please do that. If you do that, that would be great. I really appreciate that. And till tomorrow. Happy trading, and make sure that you get on the Action Trade Alerts list. Super easy to do, www.Dallas Trading Floor, and I will see you tomorrow.